Hello, everybody. My guest today is David Benigson. He founded Signal Media in 2012 with the belief that artificial intelligence would fundamentally change the way businesses worked. As CEO, he's led Signal through multiple funding rounds totaling 8.2 million euros, most recently a $5.8 million Series A in December of 2016. He was named to the Forbes 30 Under 30 Europe list in January 2017. David, are you ready to take us to the top?
Sure, absolutely.
All right, so very good. So tell us more about kind of what Signal Media does and what's your business model? How do you make money?
Sure. So, we founded the company 4.5 years ago, and really we founded it under the premise of two big problems and challenges that most businesses face today. One being the explosion of information accessible to large organizations, the fact that companies have just never had greater access to information and yet never found it harder to transform that information into actionable insight. And the second kind of major challenge that most businesses face if you walk into them is the fact that knowledge is siloed. It's trapped in the heads of people who work at these organizations. So we built Signal, and we apply machine learning and AI to solve those two problems. We aggregate a lot of the world's information and apply machine learning to transform that information into insight. And then we enable our clients to train up our systems with their domain expertise so that they can unlock all of that expertise and ultimately get the machine learning and the algorithms to deliver them better insights and better results and more relevant results.
And is it a SaaS model?
Yeah, it's a SaaS model. So our business model is ultimately to sell a software product, an application that our clients license from us on an annual basis. And typically they pay for the number of seats, the number of logins, and therefore the kind of breadth of access that they would have within their organization.
And what would you say kind of the average customer is paying per year?
So it's kind of starts at anywhere north of kind of $20,000 a year, and then it can scale into kind of high six figures and even in some cases seven figures. So we kind of have a breadth of customers across that broad spectrum. And it really determines on kind of the number of use cases and the kind of number of seats that the organization wants to have access to.
And how have you scaled this thing over the past 4 years? Tell me the story of how you got that first customer.
Yeah, so we started the company in a garage, which I guess is where all good technology businesses are founded, of course, even here in
Is that
London.
A garage?
A garage,
okay.
Yeah, sorry, you say garage, you say garage.
I like carriage, but it's better.
2 years with building out that kind of underlying platform. And obviously we are taking pretty cutting edge embryonic technologies within AI and machine learning. And so a lot of it was about proving out we could actually do this at scale, that we could aggregate the world's information and use machine learning to transform that information into insight. Winning our first few customers is always kind of really challenging and probably one of the most kind of exciting memories that you have within the company. Our first client was in the financial services space, and I remember sitting in our garage and trying to figure out what was the best way to price the product with my two co-founders. And I think my chief data scientist said one number, and my CTO said another slightly higher number, and I decided to go 10 times that number. And when the client then confirmed that they were happy with that price, we thought, God, we should have gone even 20 times higher. So
they were happy with the 10 times price.
They were happy with the 10 times price.
How much was it? Do you remember?
It was at about $10,000 a month.
That's so funny.
So we could have maybe charged them even $20,000 or $30,000 a month and got it.
That's so funny.
I guess that just kind of demonstrates when you're just starting out, value pricing and understanding where your product can fit into an organization is really, really difficult. And so I guess it's a journey of iteration and kind of experimentation that's important.
And so from customer one to where you are today, how many customers are you at? What have you grown to?
Yeah, so we're at about 150 corporate clients now. And so, we've scaled. I think it's been a very, very exciting journey. In particular, over the last 12 months, it's taking on that Series A funding that you mentioned before. We've tripled the number of customers and almost quadrupled the revenue in the last 12 months. And so that kind of experience of scale and really seeing the business starting to take off has been very, very exciting for us. Yeah.
That's impressive. Yeah. Look, you mentioned earlier your ACV is about 20 grand first year minimum. If I multiply that times 150, that puts you, what does that put you at? 250 grand a month at minimum, or about maybe, what is that? 3 million annually. And you 4X that year over year. So if I go back to December 2016, you were doing around 62 grand, something like that?
Yeah, so we've literally gone from about 40, 50 customers and more than tripled the customer base in the last 12 months. So that's been really an exciting journey of scale for us. And, not only are we kind of selling to more customers, we're also demonstrating we can kind of upsell and expand those customers. So that's been really exciting for us as well. We started in a beachhead of applying our technology into corporate communications. and enabling those teams to use us for kind of reputation monitoring and analysis. And over the last kind of year and a half, we've really started broadening out and selling into other departments across the organization, selling into risk and compliance, selling into what we call horizon scanning, which is spotting investment opportunities earlier. And so really, we've not only been able to kind of scale the number of customers and the ultimate kind of top line revenue, but also kind of deepen the relationships that we have with enterprises.
And I want to make sure I give you the credit that you deserve. I mean, is that about right? You're doing about 250 grand a month right now, or way more?
Yeah, I mean, we don't typically share the kind of top line revenue number, but ultimately, that scale from 50 customers to 150 customers is really a kind of key metric that we're very proud of.
Okay, but I'm just to be clear, I'm just multiplying your numbers. The minimum you told me was 20 grand a year times 150. It's fair to say you're doing north of 250 grand a month, right?
Yeah.
Good. You just don't. I totally understand. You wouldn't want to put a top on that because you don't want people to know. But you could be significantly bigger if you have 6-7 figure contracts.
Yeah, absolutely.
Very cool. Why raise money?
You mean venture capital funding?
Yeah.
Yeah, so I think venture funding is all about trying to go faster and scale more quickly. And I think, there's something certainly to be said for organic growth and, taking your profits and your revenue and reinvesting them into the company. But I think ultimately, if you think about the markets we're trying to sell into and the scale of ambition that the organization has, we're going up against some, relatively big, large incumbents who have been around for 10, 20, 30 years with, hundreds, if not in some cases, thousands of sales reps on the ground. And already deeply penetrated into multiple geographic markets. And so we have this ambition that this company could, really be a game changer and a disruptor into these incumbent industries. And so I think for us, venture funding is a way to, maximize our potential and move at the speed and with the level of aggression that we really want to.
Did you already have a big enough cohort of customers come through like your tracking back end to understand pretty predictably what CAC was? And that's why you had confidence raising the capital?
Yeah, I mean, I think all of those metrics are super important. Your top line growth is important. Your cost of acquisition is important. Renewal is absolutely important, as you'll know, in a software as a service company, as well as.
What are you guys at right now in terms of churn annually, or the opposite, retention annually? Yeah,
so I mean, typically we don't share those that data either, but we're very, very proud that we've been able to retain the majority of our customers, and where we have in some few examples churned customers, I think it's typically been out of our control. So businesses either merging or in some cases, unfortunately, going bankrupt. But our kind of underlying health of our revenue is perhaps even more impressive than that top line growth number. And so for us, that's something that we're very, very proud of, and also think a lot about and take a lot of care with. And so, we've invested just as much in our customer support and customer service side of the business as we've tended to on new business, which is very, very important for us.
So, I mean, is it generally fair to say you're retaining more than 90% of your customers annually? That would be good in my book. Yeah,
absolutely.
Okay. Have you hit the holy land kind of negative net revenue churn or no?
Yeah, no, we have. And that's also a really exciting thing for us to have achieved. That net positive expansion is again, really, really important in terms of the long-term sustainability of the business.
What levers are you pulling to drive expansion revenue from year 1 to year 2? Is it more leads, more seats, more API calls, more data? What is it?
Yeah, so I mean, it's a combination of some of those things that you just mentioned. Obviously, seat expansion is really important for us. So getting more users onto our tool and delivering more value across the organization. We have a kind of two sides to our pricing matrix. One is obviously the number of seats, and the other is kind of modules. And modules can be data sets or can be more product functionality. And so ultimately, if we've sold a client into kind of a lower combination of those two things, then we have an opportunity either midterm or at the end of the first year to be able to try and expand those seats, expand those contracts as well.
And what do you try and optimize payback period for? How quickly do you like to get your money back?
Well, I mean, I think there's a lot of great benchmarking in the SaaS market that kind of shows you best in class what CAC should be, and I think anything under 12 months is good, and anything under 6 months is fantastic.
So are you good or fantastic?
I mean, again, these are not numbers that we publicly share, but again, we're always striving to be fantastic. Obviously, that's a core goal of ours across all of the facets.
So is it fair to say you're between 6 and 12 months in terms of payback?
Well, I mean, as I said, we're always striving to kind of really match those kind of best in class SaaS metrics. And so, we are, typically benchmarking ourselves against organizations that really lead the pack in that regard. And
this is the reason I'm trying to understand, like, maybe not your numbers specifically, but when you say like best in pack, my audience doesn't always know what that means. So when you look at other companies and you say best in pack, you're talking 6 months or less or 12 months or less?
Yeah, no, certainly 6 months and less. I mean, I think there's a lot of really, really good data For your audience, OpenView Partners in Boston just released a really interesting data set where they benchmarked, I think, 300 plus companies and looked at a whole bunch of SaaS metrics. And Matrix Partners as well, another venture firm in the US, also released a really interesting benchmarking data set. So these are really useful tools to be able to kind of measure yourself, not just on CAC, which is only one metric out of a suite, but everything from your top line growth, your payback periods, your retention rates, all of those things. I think is really useful as an organization to be able to benchmark yourself.
Are you generally getting more aggressive with acquiring customers or less aggressive in terms of spend? Sometimes people are willing to pay more because it's a hot time in the market. You want to get as much market share as possible. Others are trying to go towards profitability, so they want to decrease that.
No, I think we're being relatively aggressive. I don't think kind of unnaturally aggressive, but I think certainly we are looking at the market. We're very excited about the potential. We're very excited about the validation our customers have given us, and so I think our intention is to continue doubling down into the market and trying to be aggressive where we can.
And can you, considering the economics you've just shared with us, do you pretty confidently assume lifetime value is always greater than kind of 50, 60 grand on any account coming into you, or is it higher or lower?
I don't have the figures to my hand, but I think it has to be really if you want to make the long term maths of the business work.
Yeah, interesting. And what are you at today in terms of team size?
So we are today at about 65, 70 people, and it's broadly split between product engineering and data science, and then the other half of the business, the kind of commercial side.
And location wise, where are you based?
We are located in London, co-located all together.
Everyone together. Yeah.
Oh,
that's great. Okay, very good. All right, let's wrap up here with the famous 5, David. Number 1, what's your favorite business book?
Good to Great, of course.
Number 2, is there a CEO you're following or studying right now?
CEO I'm following or studying right now? Look, I watch on with a lot of interest Elon Musk for various reasons.
Number 3, besides your own, what's your favorite online tool?
I would have to say Slack.
Number 4, how many hours of sleep do you get every night?
At least 7. I'll get very grumpy.
That's pretty good. And what's your situation? Married, single, you have kids?
Single, no kids.
Good.
Just signal babies.
Signal babies. That's good. And how old are you?
I'm 29.
All right. Last question. Take us back 9 years. What do you wish your 20-year-old self knew?
Oh, wow. Just have fun and don't take life too seriously.
There you guys have it from David. Have fun. Don't take life too seriously. He launched Signal back in 2013, now up to 65 folks really playing in the artificial intelligence machine learning space. His first, he undersold his first customer thinking it would be a lot. It actually closed really quickly, 10 grand there. He's now got over 150 customers actively using the platform, paying a minimum of 20 grand per year. So they're over 250 grand in MRR, and they have 4x that over the past 12 months. So really great growth, raised significant amount of capital. I believe over $8 million, about $9 million, or 9 million euros, pardon me. Super healthy unit economics. Again, growing with his team there in London. David, thank you for taking us to the top.
Pleasure. Thank you.